The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now. What's up, traders? This is Vee Trades, and today I'll be doing a technical analysis breakdown for the Spider S&P 500 ETF Trust with the ticker symbol SPY. If you want a chart analysis guaranteed to be done, please read the description below. Also, take a second to give the video a like and subscribe for more chart analysis. I appreciate it very much. This video is for entertainment purposes only, does not constitute any financial advice. I will first go over what I see in the daily chart and finish the video off with the weekly and monthly chart. So here we have the daily chart for the SPY, and I believe last week I was expecting prices to get rejected from this 392 level and then continue lower, not see this breakout pullback occur and continue higher. But it looks like we did see that fail, and prices did continue to move higher. So my other target was the 410. I was thinking if we're not going to get rejected here, prices are going to continue higher, and the next logical area it wants to reach is this 410 level. So let's go over the reasons why that occurred. Overall, there was this previous range pattern in play right here. I'll make the range patterns orange and the trends yellow. So we had this bigger orange range, and then we had a smaller orange range right here. So it looks like the bigger one took precedence because prices are coming back inside of that one instead of coming back inside the smaller one. Also, when we when we broke outside of this bigger range, we doubled it. Prices found some type of support at the bottom side of that move, of that target, and then we saw the rally take place. So another big reason why we did that was this previous spike in channel play. You can see this is a spike in channel pattern. This is the spike right here. And then it was a little unsustainable, and then prices went inside of a flatter channel. So there's multiple reasons why we're going higher, mostly due to this uptrend still being in play. You can see that we had the first break of it. Now we're going back to retest the previous extreme, which is right back here at the 410 level. Also, it was a breakout of this big orange range, which most breakouts fail, and now we're inside of this micro uptrend channel. So it looks like prices are going to continue to move higher in my eyes. For bulls, it's good that prices came back inside this orange range, and we're about to fill in the gap right now. It looks like it was filled on Friday, and the next target it wants to reach is the top side of this range because we had a breakout of this bigger uptrend channel that was shown in yellow right here, and we usually retest the previous extreme. So it looks like we're going to continue to move higher. I mean, we could see a slight pullback, maybe a little bit higher prices, and then a pullback, and then another leg up, or we just continue to move in the fashion that we're currently running at to the 410 level. So, the chart is looking kind of bullish right now, and I'll be expecting higher prices. So, like I said before, last week I was expecting this to continue lower. We did see that rejection. We did see the rejecting, like I said, for the 392, 393 level, which was this red candle. But you can see that prices found some type of support at the EMA, and we just continued higher. It was basically a short trap. Shorts who entered right below this candle, put the stops here. They were thinking we were going to get that second leg down, but you can see the uptrend channel was still in play. We had a breakout of the bigger pattern, so this was just a trap, and prices rocketed up. So looks like they're going to continue to moving the market higher in my eyes. That's everything on the daily chart. Let's go over the weekly chart. Here's the weekly chart for the SPY, and overall pattern is still down. You can see this downtrend channel right here is holding prices. A big reason why we're not going down like we did in the past, like right over here, is because prices came up short on this side of the channel. So since the market is symmetrical, we could see a breakout occur on this side, and that's what it looks like it's about to do. Because like I said before, we came up short on this side of the channel. Also, this uptrend channel was in play too. So basically, there was a couple of reasons why we didn't continue lower, just from getting rejected from this side of the channel. And also another thing is, we're not going to do it forever. Eventually, we're going to break the pattern. This just shows the strength for the bulls at these lower price levels, and the downtrend is probably coming to an end fairly soon. So right now, we're just kind of going flat. You can see we're trading same price as we were in May of last year. So basically just chopping back and forth between this 392 or even this $400 level. So you can see that we're pretty much trading right at the same point in May. So just going up and down between this price level. But again, it looks like we are going to continue higher. I'm expecting that 410 level to be hit, and then from there, maybe we continue higher, we'll have to wait and see. If not, since this is the first break of the yellow channel, there's still a good chance we go down to retest the previous extreme. So we'll have to wait and see. But as right now, as long as we don't go back above the 431 level, then this measure move target holds. This is the first leg down, this is the second leg down, and it's right at the 315. So I'm still expecting lower price targets. I believe we're just experiencing a larger pullback than before. So I'm looking for a lower price target. So that's everything I have on the daily and weekly chart. Let's take a look at the monthly chart to wrap it all up. Now here's the monthly chart for the SPY. Been going up since 2009, which I can put a channel on the price chart. You can see the trend line on the bottom is holding prices very nicely, and we are getting rejected from the top side, and top side sends prices to the bottom side. So that's where prices are trying to work towards. We're getting kind of caught up at the median level of the channel, so it's very choppy right now, and it does look like prices do want to continue higher, at least for the month of January. So it does look like we're going to be seeing a little bit higher prices, and we'll have to wait and see if that will be resistance for price to continue lower, or we just have found some type of bottom and we're going to get another retest of these highs. We'll have to wait and see. Just got to keep an open mind. Nothing is 100% in the market. That's what can get you in trouble, is when you're 100% confident in anything. You just can't do that, because that's when you get in trouble. You start adding on to a position, or you start moving your stop losses higher and higher when the market is trying to come for it. So that's when you can get in big trouble, when you're 100% on anything in the market. So right now we're just very choppy. In the short term, it looks like we're going to continue higher, and the medium to long term is still up in the air if we're going to continue lower or not, but I believe we will. So we'll have to wait and see. That's all I have for the SPY this week, and I'll see you guys next week, Sunday. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel, since you might be surprised at what you can learn. Leave a comment down below on where you think prices are headed. Also share the video with your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel, since I want to deliver great content to you guys. See you next time, and bye.